In this morning's U.S. Bank Economic 360, activist investor is a term that's been making headlines here in town this week, and one that's been making quite a few headlines on Wall Street in recent years. U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins Business Courier publisher Jamie Smith in the studio to talk about what exactly activist investor means. Jamie and Mike.
Thanks, Peg. Mike, thanks again for being here.
Good morning.
All right, you know me, I want to start at the beginning.
Sure.
What exactly is an activist investor?
Right, so it's almost exactly as it sounds. At the very base, this is an individual who, via investments, wants to have the say in how a company is being run. So most of us, when we buy stock, we're looking at it as an investment, right? We really don't have any interest in how the company is run day to day. No. So we are, important to remember that when you buy stock, you are becoming an owner. If you own shares, you are a part owner of that business. When you or I buy a share of stock, we want to be an owner, but we'll be a passive owner. We're not going to have any influence on management. On the other hand, an activist investor is someone who does want to go in and get their hands dirty and help with the management, hence the name. They're going to be an active owner. And so this is someone who's simply looking to use that ownership interest to influence how the company is being run.
So how's it happen? I mean, how does that get carried out?
Well, so in theory, I guess anybody could be an activist investor, but the key is how big of an owner are you?
I was going to say, depending on the volume.
Sure. So if you or I buy 100 shares of stock and we call the company with some helpful suggestions, they'll probably very politely tell us, thanks, but no thanks. On the other hand, if you own $3 billion worth of stock, that's going to get management's attention, right?
Yeah.
And so from there, it can go any direction. Different activists are looking for different things. Some want to work very closely with present management. Others want to replace them entirely. Some want to make minor adjustments to corporate strategy. Some want to quite literally dismantle the entire company. So there's no one set playbook for how things will go. Every situation is different, but there is one constant, and that is first you've got to get a seat at the table.
Right. Would you view this as a successful strategy? I mean, is it proven?
Well, Jamie, it won't surprise you to hear me say that it depends. So sometimes yes and sometimes no. So at a very base level, the activist investor tends to believe that the company is currently undervalued and that by making various changes, you can increase the value of the company. So in theory, that sounds great. Who wouldn't want that? But like anything else, the devil is actually in the details. So the activist may have these grand schemes in mind of how to get the company going in the right direction, but do those actually work? Do they end up working closely with management, or do they end up arguing in court? So, there are just way too many variables here to say what works and what doesn't.
Yeah.
Every case is different, but certainly there are plenty of examples where working with an activist investor has paid off for everyone. And then, of course, there are plenty of examples where it also went off the rails.
Well, and it's not like it's in a bubble either. I mean, there's other things going on in the market as well.
Absolutely.
So it's hard to tell what causes it.
Absolutely.
Well, we'll keep our eyes on it going on here in Cincinnati, and we'll probably talk about it again someday.
Sounds good.
All right. Thanks a lot, Mike. Bye.